We are proud, sir. We are living in your, we are in that way. You have accepted our invitation with your busy schedule. We postponed so many days in the March for your appointment, getting of your appointment. Really, you are a wonderful person and humanitarian to accept our invitation, whatever maybe you accepted in the last day of March. But anyway, we are having still we are having 2 more days. Anyway, thank you so much, sir, for coming over here to share your views to our people. Next, I would like to extend my pleasant welcome to our General Secretary, Rangarajan sir, Andhra sir. Employees Association people. For their help only we are conducting this endowment lecture. Next, I will extend my warm welcome to my friends in the academic friends. So many people are appearing here. Professor Karimullah Pasha, Professor Abdul Karim, Rabi, so many people. If I count, if I spell out their names, means it will take too much of time. For that reason, I welcome all the people, all my friends, students, research scholars, other institutions, affiliated colleges of Madras University, professors, students, scholars, each and everyone, I extend my warm welcome. Thank you so much. Now, just I want to share some of the memory of Sri Rangarajan Chakrabarti, because on his name only we created that people, all India Bank Employees Association people created this endowment lecture. For that reason, we want to recollect his service to the society. In that way, just I will put some of his credit on his side. Sri Rangarajan Chakrabarti was a General Secretary of All India Bank Employees Association, the oldest and largest trade union of bank employees in India. He born in 1926. After education, he joined Central Bank of India in 1946. The condition of the bank employees in those days who suffered from less wage and lack of job security. I request the audience to keep silent, please. It's online program is also going on. Live program is also going on. Professor Sundaram sir, please come over here. Please. Please. Come. The condition of the bank employees in those days was first, they lacked job security, proper service conditions, etc., made him to think that he should do something for this condition of the people. In 1946, All India Bank Employees Association was born to work for the betterment of the bank employees in India. Rangarajan Chakrabarti took keen interest in organizing the bank employees and soon became a popular leader of the employees at a very young age. He had a clear vision that while endeavoring to fight for the economic betterment of the bank employees, Bank union should also fight for bringing the private banks under the public sector because private banks were not helping the need of the common mass. And further, many private banks were getting closed and the depositors were losing their hard-earned service. He was a portrait of struggling of the bank employees demanding nationalization of the bank. In 1969, major banks were nationalized and brought under public sector. Rangarajan Chakrabarti now fought for changes in the policies of these banks to help the needy sector of the economy and the common people of our country. Later, he realized that in many banks, bad loans were increasing and the banks were increasing losses on account of the same. Hence, he built up a massive campaign demanding stringent action on the loan defaulters. He published the list of big loan defaulters. He organized many rallies before Parliament demanding corrective action to recover the bad loans. He died in 2003. He served the bank trade union movement under AIBEA for more than 5 decades. He was the ardent believer that banks in India have to play a leading role in the strengthening our economy. In his name, to create his name, AIBEA instituted a memorial endowment in the University of Madras, particularly Department of Economics, and annual memorial lectures are being organized from the year 2002. This is a great pleasure because we people are fighting for the economic freedom and also to serve the people, sir. In that way, it is a happy to conduct your endowment lecture for our department, sir. Whatever may be, so many for this particular endowment lecture, so many people came to my mind and who I have to select for this particular endowment. For that, immediately the name strike out that our honorable chairman, the Rangarajan sir came to my mind. Can we proceed, sir? His name and he happily provided so many help to our department also. You can see that a big banner in front of our entrance. Very happily he provided. He agreed so many things to serve for our department. In that way, thank you so much, sir, for extending your help to our department. I would like to share some of the credit, not yet credit. The young students are here. I wanted to read out your credit for their sake. Kindly accept me, sir, because you are a well-known person, known for introduce. In that way, kindly permit me to read some of your credit in front of the audience, sir. Thank you, sir. Professor C. Rangarajan is a leading economist of India who has played a key role both as an academic and a policy maker. He has held several important positions, which include Governor of Reserve Bank of India. So, for that reason, I selected his name for this particular endowment. Governor of Andhra Pradesh. Dr. C. Rangarajan was still May 2014 as a chairman, Economic Advisory Council to the Prime Minister in the rank of Cabinet Minister, a position he has held since January 2005, except during 2008 and 2009 when he was a member of Parliament. During 2003 and 4, he was a chairman in the 25th Finance Commission, a constitutional commission set up every 5 years to determine the sharing of tax revenue between central and the state government. Dr. Rangarajan was a governor of Reserve Bank of India, as I already told you that, during the period of 92 to 97. At the time when India embarked a wide range of economic reforms, which fundamentally altered the structure of the Indian economy. He was actively involved in the design and implementation of the reform agenda. The path-breaking reforms that he implemented during this period include deregulation of the industry, strengthening of the banking system by gradual tightening of the prudential norms, creation and nurturing of the financial market and giving them depth and vibrancy. Shifting to the market determined exchange rate, making the rupee convertibility on the current account and the concession of the automatic monetization of the budget deficit. India became a member of Bank for the International Settlement during his time as a governor. Said great credit on this side. We obtained so many degrees, we delivered so many lectures, we served a honorable professor in various institutions. One particular institution, if I pronounce the name, means you people aware of that, how much credit he is having in this side. That is IIM, Indian Institute of Management. It's a great thing, and also he served as a professor in the School of Finance and Commerce, University of Pennsylvania, and New York University. So many other things that he served. So in that way, it is a great honor to invite for our lecture, sir. Thank you so much. And he has authored so many books. The last month also, could you remember that when we both of us sitting to discuss the doctoral thesis, one particular candidate, you gave so many suggestions for that candidate, still I remember. Still you are thinking that you can do anything else for the Society of Economics. In that way, we people are proud to invite you, sir. Thank you so much. And once again, I wanted to extend my warm welcome to all of you. If anybody, any names, if I left me, kindly excuse me. And also, I would like to extend my welcome to the online people also. So many people, our Professor Selva sir also come over here. If I left out any names, kindly forgive me. So many people are joined through online also. For that reason also, I welcome all of you, sir. Now, I invite our great speaker, because this is only a formal endowment lecture. I don't want to mingle, I don't want to mix anything else. For that reason only, today, I have not, we people don't want to play any Tamil or general practices of all these things. Just we wanted to keep it in only in academic. Only academic. For that reason only, now I welcome you, sir, to deliver your lecture for our people. Thank you so much, sir. As a token of love, we wanted to extend a shot to our speaker, please. on behalf of Department of Economics, we wanted to give a shawl to our speaker. Please, I request Professor Satyavan sir, he belongs to our School of Economics. I request him to come over to the stage and honor our guest, sir. Thank you.
So, Mr. Rangarajan, distinguished faculty, distinguished invitees, and my young friends who are here to graduate in economics and other disciplines. Let me at the outset express my happiness to be here this morning with all of you and to deliver this lecture instituted to commemorate the memory of Rangarajan Chakravarti, one of India's outstanding trade union leaders. During his entire adult life, he devoted himself to promote and improve the conditions of the bank employees and also to strengthen the banking system. Trade unions are an essential part of the democratic system. They play the role of improving the living conditions of the employees and at the same time contribute to the strengthening of the economic system. In fact, trade unions, if you look back at the history, originated first to provide the safety of the workers. Because in the early years after the Industrial Revolution, even the safety of the workers was very important. But later, then the need for strengthening the hands of the employees in being able to get a reasonable standard of living became urgent. But the role of trade unions is also changing. Much of the world is in the progress of transition. And therefore, I would like the trade unions to look back and look forward. Look forward to see what the new changes that are about to come in the world and how to adapt the workforce to suit the changing conditions. They also need to look back and see where they may have done better and where and what the areas in which they could do better. So I welcome this opportunity to deliver this lecture in memory of Sir Chakravarti, whom I have met many times during my own professional career. I want to speak to you this morning about the evolution of monetary and banking policies. I will talk a little bit more about monetary policies and banking policies because the limited time one cannot expand the ideas with both, but I will certainly speak a little bit about the banking policies. Monetary policy is one of the instruments of economic policy. The other instruments of economic policy or fiscal policy and fiscal policy deals with raising revenues and strengthening and thereby influencing the economic activity. Direct controls are part of what we call the command and control system, in which the government promotes or discourages certain activities through direct controls like permitting or not permitting, giving licenses or not giving licenses. What is monetary policy? You hear a lot about monetary policy these days. Monetary policy includes all the actions of monetary authorities which have a bearing on the cost and availability of money and credit. The monetary authority in India is the Reserve Bank of India. It takes several actions, and those actions result in the changes in the availability of money, or the cost of money, or the availability of credit, and the other cost of credit. When you analyze any economic policy, there are three things about which you can. There are three aspects about which you can talk about it. One is, what is the objective of that policy? Second, what are the instruments available to that authority to implement that objective? And thirdly, what is the effectiveness of that policy? They may take some action, but we need to understand whether that action actually resulted in the results that they had in mind. So to go back, the monetary policy, monetary authorities expand credit or lower the rate of interest when they think the economy needs an expansion. On the other hand, when the economy is overheated, then the monetary authority tries to contract the credit and raise the rate of interest. So it depends upon the assessment of the monetary authority regarding what the status of the economy is. If the status of the economy is such that it requires incentives to expand, then lowering the rate of interest and increasing the liquidity for money becomes essential. On the other hand, if the assessment of the monetary authority is that the economy has already reached its peak, then they want to control the system and therefore raise the rate of interest and contract the credit. So we need to take another look at what are the objectives of monetary policy. If you want to know what the objectives of monetary policy, where do you go and find them? The objectives of monetary policy are usually embedded in the enactments which set up that institution. For example, the Reserve Bank of India was set up under the Reserve Bank of India Act of 1934. Similarly, the Federal Reserve Act established the Federal Reserve System in the United States. Similarly, in the European Union, it has also now a European Central Bank, and there is also an enactment which puts what the objectives are. Therefore, in that sense of the term, we really need to look at the objectives, and we have to go to the preamble of the Constitution, the preamble of the statute or the act. But very often what happens is that the statutes do not very clearly indicate what the objectives are. For example, the Reserve Bank of India Act, its preamble says it was set up with a view to securing monetary authority in India and generally to operate, mark the words, to operate the currency and credit system of the country to its advantage. Now this is very vague. Operate generally to the best advantage. Now you are further asked the question, best advantage. But for example, there is the United States, the Federal Reserve Bank. It says so as to promote effectively the goals of maximum employment, stable prices, and moderate long-term interest rate. This is a little more specific. It says the objectives are price stability, the objectives are growth, and then it also adds about long-term rate of interest, which many think is an instrument and not an objective. Let's look at the European Union. It is even more categorical. And it says the primary objective of the ECB, European Central Bank, shall be to maintain price stability without prejudice to that objective. It shall support the general economic policies in the Union in order to contribute to the achievement of the latter's objectives. So clearly says that price stability is its objective. Now, the Reserve Bank of India Act was also modified in 2016. And the amended preamble to the Reserve Bank of India Act says, whereas the primary objective of monetary authority is to maintain price stability while keeping in mind the objective of growth. Okay. So we have some idea now that the objectives of monetary policy will be to promote price stability, but also not to forget the objective of growth. So in a sense, there are two objectives that come up. One is growth. What it means is the monetary authority must act to facilitate growth. And the other objective is to maintain price stability. So, as I said earlier, one may ask the question, why do you need objectives? You set up the Reserve Bank of India, let the Reserve Bank of India act in its own business. That is not the correct thing, because to make an institution accountable, you need to have an enunciation of the objectives. If supposing somebody were to ask whether Reserve Bank of India has performed better or not, how will you answer it? Unless you know that the Reserve Bank of India was set up to perform these functions, this objective, and if it has fulfilled that objective, then the contract fails. Therefore, the enunciation of the objective is extremely important in order to make the institution accountable. So that is the reason why we spend a lot of time trying to understand what the objectives are. So a lot of people talk about the fact that institutions have multiple objectives. What is the problem with multiple? Growth, price stability, exchange rate stability, financial stability. We can list so many objectives. All of them are important. They taken by itself, each objective is important. But what is the problem with multiple objectives? The problem with multiple objectives is that the fulfillment of one objective may come in the way of the fulfillment of other and price stability. Sometimes if you act to maintain price stability, then let us say in order to maintain price stability when there is, when in the opinion of the monetary authority, contraction is needed. Somebody else might say, well, this contraction will come in the way of growth. Therefore, the most important thing about multiple objectives is that there is a conflict. And that is where you, as students of economics, will always realize that the problem in economics is essentially because that the objectives can be more than one, and there can be a conflict between objectives. Then you have to really decide which objective is more important than the other objective, given the situation. It is not as if that one objective is more important than another all along. One objective is more important than another in the current time. Some other time it may be different. That is why we talk of in economics as trade-off. When you have two things, you say trade-off. All of you must be students of microeconomics. You will talk about the indifference curve and so on and so forth. Now you have apples and oranges. Then one combination of apples and oranges gives you satisfied. But if you want to have more apples, then you have to have less oranges. You can't have both more and have the same level of satisfaction. Therefore, all of economics is a matter of trade-off. Please remember the original definition of Professor Lionel Robbins on what is the definition of economics. Economics is a study of mankind. It's a study of economic behavior and means to achieve it, which are alternative uses. That's what we say. The most important thing is the ends or means at the disposal to achieve those ends are limited. But these means are not only limited, but also can be alternative uses. Therefore, please understand, when you talk about monetary policy or any policy, it can have multiple objectives, no problem. But then you must be willing to say what is the trade-off between the two. To take a good example of the current period, we are emerging for the whole year. Now, what is to be done? One view is the economy is tough. We need to stimulate the economy, and therefore monetary policy should be expanded. That's what RBI keeps saying. We are expanding liquidity. We are keeping the policy rate with the interest rate low. But there are others who feel that maybe we have reached a point at which inflation will become finished. Those of you who have been studying will know. Today, in the Federal Reserve System, they have taken a clear view. They say we have reached a point where inflation has already reached a level which needs to be contained, and therefore they have shifted the policy stance. Federal Reserve System, like the Reserve Bank of India, followed the same policy stance at the time of growth. Namely, we have to stimulate the economy, and therefore we must provide more liquidity and keep the rate of inflation. But in the Federal Reserve System, or in the United States today, inflation is at the highest level in the last 3 decades. But what happened? Therefore, now what they have done, they have shifted. The monetary policy has shifted to say, no, we will now control inflation and put the growth objective as the pillar. Now, the Reserve Bank of India is yet to take a decision. I think the Reserve Bank of India, even the monetary policy committee, even at the last meeting, took the decision that we have not yet reached the point. But the whole question will arise when all other countries in the world keep raising the rate of interest. How long can India resist from raising the rate of interest? So, to put the problem in the perspective, what I would say is the monetary authority has clear objectives, price stability and growth. But there's a trade-off with it. Now, what is the system that we have in India? The system that we have in India is very often described as the inflation targeting or flexible inflation targeting system. After the amendment of the Reserve Bank Act in 2016, the Reserve Bank of India is required to maintain the price in the consumer price inflation at 4%, plus or minus 2%. So the objective now of the Reserve Bank of India is to ensure that inflation remains at 4% plus or minus 2%. So this is what we call the comfort zone. Basically, from 2% to 6% is the zone in which the prices should evolve. Inflation target was started first by the Reserve Bank of Australia in 1990. Many countries in the world have adopted it. Now, there are many issues associated with it. Namely, how did they arrive at 4%? Now, this is the big issue. And this is what we call threshold level of inflation. That is, for each country has a threshold. The level of inflation beyond which the economy will suffer more. Up to 4% inflation, it is felt the economy can look at other things. But if the inflation goes beyond 4% and stays at that level and not go beyond 6%, it is okay. But basically, it means that if inflation goes beyond 6%, then the monetary authority must act. Of course, the inflation now in the last 2 months has gone beyond 6%. But the monetary authority also will have to take a view whether this is something flash in the pan, maybe that it's only happening in 1 or 2 months, it will revert back to it, then they may not take action. So, when I talk about the objective of monetary policy, these are some of the issues that arise. And you see the evolution of monetary policy. Basically, until the amendment of the Act of 2016, people talk generally about price stability and growth as a thing. But subsequently, I think we have sort of made up our mind regarding what that price stability means. Basically, the message is that the country needs to, the monetary authority needs to maintain the price stability at around 4%, or the price inflation at about 4% with the margin. One can ask the question, why the margin? The margin is because it is always difficult to maintain inflation at one particular level. Take for example, countries like India are subject to supply shocks. That could be a year in which the monsoon fails. Then what happens? Then agricultural production falls. Therefore, at that time, the prices will rise. Therefore, instead of saying that it should be 4% alone, the statute gives us the freedom to move between 2 and 6%. But the implication of that is that beyond 6% is the level of inflation which needs to be curbed or cut. So, of course, as I told you, that there are criticisms of even inflation targeting as model for monetary authorities. Some people say that no, discretion is better, leave it to the monetary authority to decide. Now, before I move to something else, let me tell you about instruments. I will not talk about instruments very much now this morning. You were students of banking and money, would have read about it. One is the bank rate that we call it, or the policy rate, or the repo rate as we know, as it's called now, and the other is the open market operations. These are instruments through which the Reserve Bank of India or any central monetary authority tries to influence the level of liquidity or money or the level of interest. Now, what are the problems in using these instruments? Take, for example, the current situation. At the outset, with the onset of COVID-19, the Reserve Bank of India took the decision to expand credit, expand liquidity, keep the rate of interest low. The policy rate was brought down to 4%. Now what happens? What is the expectation? The expectation is, as the liquidity increases, the rate structure will come down, and there will be more liquidity in the hands of the banks so that they can provide a lot more credit. That is the principle behind it. Now, what happened actually? Actually, the credit growth has been modest, even though there was so many expansion that we of a much higher order. That is the old saying, we can take the horse to the pond, but cannot compel it to drink. We can make available more liquidity. We can make the banks say that you are willing to provide more credit. But what they expect, what they expect the credit expansion will depend upon the willingness of the borrowers to borrow from the banks. Because that is important, because the borrowers have to repay the loan. And therefore, borrowers have to take a view whether in the given situation that prevails in the country, whether the expansion of output is possible or not. So, when there is a severe lockdown, you can understand there is no mobility of people, there is no mobility of the movement of goods and services. But then where will they sell? Even if they can produce. Even production becomes a difficulty because workers are not making their again. So the decision rests with the borrower, the entrepreneur, the company, the enterprise. And therefore, while the Reserve Bank and the banking system may want to provide more credit, whether or not actual increase in credit happens depends also on the attitude of the borrowers, namely the enterprise. So, when the economy is overheated, when the rate of interest is raised, then it has an immediate effect. Because what happens? When the borrower goes to the bank, he has to pay a higher rate of interest, and then immediately he resists from borrowing more because the rate of interest is higher. Therefore, the monetary authorities are usually more successful in controlling inflation rather than in stimulating the economy. In stimulating the economy, fiscal policy is important, very important, because that is why people talk about increasing the government expenditures. Because when government expenditures happen, when it increases, it automatically puts more money into the hands of, not money actually, more income into the hands of the people. And therefore, economic activity expands. But as I said a little while earlier, in the case of monetary authority, it can only say, I am giving it to you at lower rate of interest, but it depends on it. And that is why there is a famous saying in monetary literature that the monetary system has efficient brakes, but the accelerator is uncertain. Because you cannot really push the economy up unless the borrowers are also willing to do it. So, I think the actions of the Reserve Bank of India in providing for expanding liquidity and lowering the rate of interest is perhaps the right answer to the situation that prevailed in the system immediately after the advent of COVID-19. But I think as the other countries try to raise the rate of interest, and as other countries adopt inflationary control measures, a time may also come for the Reserve Bank of India also to look at its stance of monetary policy. There are a lot more to say about monetary policy. I will not say, I think let me say a few words about the banking policy. In the last 50 years and more, there have been two revolutions as far as the banking system is concerned in India. One was the revolution in 1969, when the major private banks were nationalized. The second, in 1991, when banking reforms were introduced. Financial institutions, the performance of financial institutions are judged by two criteria. One is allocative efficiency, and the other is operational efficiency. The nationalization of the banks, major private banks, in 1969, emphasized allocative efficiency. The reforms of 1991 emphasized the operational efficiency. In 1969, the feeling was that the banking system in India at that particular point in time was urbanization, was geared towards large reforms and large industries. And therefore, this approach needs to be changed. That is why more branches were opened in semi-urban and rural areas. And certain other policy actions are also taken, such as the provision for what is called the priority credit. 40% of the debt bank credit was to be directed or was to be given to certain sectors of the economy to be priorities like agriculture, small borrowers, and so on. So the allocative efficiency, namely how the resources raised by the Reserve Bank, the resources received by the commercial banks will be utilized is allocative efficiency. Now, allocative efficiency can also be determined in alternate ways. Allocative efficiency can also be determined by the market. But here the allocative efficiency was not determined by the market, but by the dictates of the government. So allocative efficiency became the primary objective of the nationalization of the banks in 1969. By the time of 1991, while the Indian banking system had expanded, it had gone into the interior, covered a very large segment of the economy. It had also resulted in deterioration in asset quality and profitability. The net worth of many of the public sector banks in 1991 was negative. And therefore, the reforms introduced in 1991 took upon itself to improve the operational efficiency. Many people forget the fact that the reforms of 1991 did not in any way interfere with the allocative efficiency. The priority sector credit was actually continued to be maintained even after 1995. In fact, because the CRR and SLR were reduced, the total amount of credit available increased. And therefore, 40% of that means much larger figure than what it was before. Many people forget. In fact, the 1990 reform resulted in a larger flow of credit to the small sector. To come back, I don't have the time to go into great details about the 1990 reforms. But I will broadly say, one, to remove the external constraints on the commercial, reduce the CRR, reduce the SLR, and also remove the administrative interest rate structure. It took me almost 5 years to do it. It's not something that was done overnight. The most important thing about the reforms of 1991 was that it was done in a sequence without affecting the system too much. So that is the second one, namely removing the external constraints. Second is the introduction of prudential norms. Capital adequacy of peoples. The word non-performing asset, which you all hear now, you would not have heard that word before 1990. It is not in the literature, any study in the banking system in India before 1990. The word non-performing asset was never used. But it is a reform of the 1990s which defined what a non-performing asset is. And if an asset is declared to be non-performing, then the return from that asset should not be taken into the profits of the bank. So prudential norms, including capital adequacy, how much of a capital that a bank should have in order to run it. That is what is very often called the Basel Committee norms, namely that yes, given percentage of the risk-weighted assets must be kept to the form of capital. And there are many others. The third is really in terms of improving the competition in the system. Two things were done. One was essentially to allow new private sector banks to come. And secondly, to reduce the share capital, the government ownership in the banks to 51%. But that still made the banks were public sector banks because they had the majority ownership in that. Fourthly, I think the supervisory system was very much toned up. I set up the Board for Financial Supervision in the Reserve Bank, which sort of looked over all segments of the finances. Now, you also hear from time to time about the increase in non-performing assets. So, if all these reforms are related, the question arises: why did it happen that we are not even talking about the non-performing assets? You see, the best growth period in India was between 2003 and 2010. Between 2004, 5, 6, and 6, 7. The average rate of growth of the Indian economy increased by 9% per annum. In 2008-9, we had the international financial crisis. In 2009, 10, and 10-11, we went back to 8% rate of growth. During this particular period, the credit also expanded enormously. People think credit growth is good, but it has also its problems. And the average annual rate of growth of credit in that period was 22%. An enormous increase in credit. Everything is good, but when it goes beyond a particular level, it is also problems. There's an old saying in banking: bad loans are sown in good times. Because in good times, everything looks good. Everything looks exciting. Therefore, every project looks exciting. The road is clear. You can't fight with people who assess. What happened? Once the growth started falling, what was originally viable became not. I'm not saying there are no hanky-panky in some of these things. Some of it could be deliberate. But by and large, you will see that when the growth rate begins to fall, what was originally viable can also become unviable. So that is the kind of situation that we face, but I believe that we can get back to a reasonable level. And the 2008-9 crisis in the United States and many other countries was also a fallout of the very high expansion in credit, particularly in the home sector in the United States and elsewhere. There are also other problems that I cannot go into. But this is for the reason. Therefore, we need to be very careful. The Nobel laureate in economics made the famous statement, make banking boring. What he meant was that let not the bankers expand credit too much. And let them be satisfied with a very limited amount of growth in the credit. And that was his argument that the multiple expansion of credit about the first lesson impact all is too much. Therefore, let them be restricted in their approach to the expansion of credit. I don't think Paul Krugman is totally correct. We can't really do that. And I think credit is also in the system. I don't know if you might have heard of the anecdote which many people talk about the bankers. There was once a banker. He had lost one of his eyes, and therefore he had a glass eye fitted into him. And this man was always blue and sickly. When anybody came, he will not talk very freely, he will not walk, he will not fight. But he had one weakness. He would ask the warriors who came to look at his face, look at both his eyes, and tell which is the glass eye. He was so proud that the glass eye was exactly like the normal eye, that people will go over. But one person looked at both of his eyes and identified the correct thing as the glass eye. The banker was nonplussed, and he said, "How did you find that?" He said, "I looked at both of your eyes, and I saw a gleam of kindness in one eye, and I knew that was the glass eye." We don't want such bankers. What we want are bankers who carefully assess the project and provide credit. Therefore, I have always said bankers should be neither timid nor adventurous. They must strike a balance between the two so that the system remains stable. So that is what I would like to say in terms of banking policy. There's a lot more to say about it, but the point really is that the strength of the banking system lies in the judgment and wisdom which bankers bring to bear upon the credit proposals. And it is in striking the proper balance between two advantages that the strength of the banking system will be. Thank you very much.
Thank you so much, sir. Sir, really today we blessed, sir, because so many issues we read from our books, monetary policy and fiscal policy, and what is the trade-off between these two, how the monetary policy control the inflation and the deflation, how it helps to do so many things in that way. We teach in the classroom, but because of you, we blessed to hear a practical application of the monetary. A little bit you touch the fiscal policy also. Again, you come back to the banking sector. In that way, it's a really great pleasure to hear your lecture. In that way, we blessed it today, sir. Thank you so much, sir. Now, normally in the development lecture, we don't have any question session. Our devotion Professor C. Rangarajan sir gave permission to ask question 1 or 2. Kindly keep it his age and tireless work. The audience can raise 1 or 2 issues for clarifying your doubts. Thank you, sir. Some friends, sir. Kindly. I'm not from here. Okay, sir. No controversial thing shouldn't rise in the forum. Whatever may be, we can have a friendly approach of clarification. We can have, isn't it? Thank you so much.
The current state of economy before us. What are your prescriptions to stimulate the economy? With the current state of economy before us, we have rising inflation. So, what are your prescriptions to stimulate this economy?
Well, as I said, that the two policy instruments, monetary policy and fiscal policy, can be used to stimulate the economy. First of all, we should understand that the decline in output that has happened is primarily because of the actions that we have taken to prevent the spread of COVID-19. That is, the lockdowns that were imposed. When the lockdowns are imposed, then automatically there is no movement of people, there is no movement of goods and services, and railways are not operating to the full extent. Therefore, the reduction in output in 2021 is essentially because of the actions that we have ourselves taken to prevent the spread of COVID-19. Therefore, the first thing that we have to do in order to stimulate the economy is to lift the lockdowns step by step, so that the production process can begin to operate. The disturbance in the disruptions in the production process came partly because one, workers could not come in full. Please remember the entire migrant labor walking out and going back to their estates. Then there is also the disruption because the inputs have to come from some other place. All the inputs are not manufactured in the same compound. Inputs have to come from somewhere, sometimes from abroad. And therefore, the first thing to do is really to manage it. You see one important difference between COVID-19 wave 1 and wave 2. In wave 1, the decline in output was minus 28%. In wave 2, it started picking up. We started getting positive numbers. Of course, the positive number came over a negative or a decline in output. But the fact remains that in COVID, in the first wave, the emphasis was on lockdown. In the second wave, we were a little less restricted about lockdown, and therefore you really started the output became pulling down. Now that is first one. I mean, I think what we would call in economics a necessary condition. Namely, the knockdowns must be removed. The second is the fiscal policy has to be expansionary and the expenditures must increase. The expenditures of the government can be put into three categories. One is essentially to remove, essentially to expand the healthcare expenditures in order to take care of the people who have suffered. More ventilators, more wards, and more expenditure on vaccination. All of that has to be done. So that is one type of expenditure. The second type of expenditure is to take care of the vulnerable groups who have been thrown out of employment and therefore who are not in a position to be able to earn anything, like the migrant labor. And not only the migrant labor, the daily wage earners have also suffered a loss. Therefore, the expenditures directed towards taking care of the vulnerable groups is the second type of expenditure. This has been incurred, for example, the farmers have been given, and the ration, free rations have been given, and so on and so on. And the third is to government expenditures directed towards stimulating those sectors of the economy which have been severely affected. One sector of the economy which is very severely affected is hospitality. Take for example, if people are not allowed to travel from one place to another place, then obviously there is no need for hotel facilities and so on. And also when the restaurants are closed, then it throws out of employment not only people working there, but also a host of other people who have been doing other services like transporting or giving delivering the food to the houses. Therefore, we need to look at sectors of the economy which have been affected and then see whether additional expenditures can be incurred. So overall, the idea is that government expenditures must increase. One must really look at what types of expenditures. I explained the three types of expenditures which are extremely relevant. The other is the monetary policy. I mean, I mentioned talk about it at 10th. I told you increasing liquidity, but then all that will have the desired effect only if the lockdown is lifted and if the demand, if the production supply disruptions are removed. So that is what will happen. So that is what is required. But the point really now is that the United States had a growth rate of 5% last year, or 2022. That is an extraordinary high growth rate for the United States. The potential rate of growth in the United States is 2%. Therefore, this is a big thing. And what they did at that time was to send a check to everybody in every citizen almost. The net result has been an inflation, as I mentioned earlier, which has not been seen for 30 years. Therefore, we need to balance this. We need to really look at how far inflation will go, and if that goes up, then probably the monetary authority will have to take measures. The monetary authority may take a little more time to come to a decision. That is quite possible. But the fact is that if inflation really picks up, the Russia-Ukraine war is another thing that has really come in the way of normalization of 22. We do not know when the war will end or what will happen, so it's not very clear. But certainly, at some particular point, our import costs increased. It has already increased, particularly in petroleum prices, and our export potential so far has been good. Our export performance has been good, but it will continue to be good in 22-23. It depends upon the nature of the war. So there are some imponderables before us, like the war, the Russian-Ukraine war. So the point is expand government expenditures, focus on vulnerable groups, focus on sectors which have been particularly affected, use the monetary policy to expand liquidity until such time inflation flattens out. That's the other thing. And therefore, in general, I think what is really needed is to raise the investment rate in the economy.
Have two issues. The first one is from the students' perception. Why the government, I mean the union government has made revision in the base year of the GDP during 15 and 16. What has made to revise this base year for GDP in 2015-16 around? Second thing is related to the recent thing that our honorable finance minister has announced in the parliament that the government has started selling the assets under the NPA process. It's selling of assets under the NPA process, whether it requires to be triggered because it is a continuous voice from the societal point of view. Can you comment on this?
No, I think what was the monetization of assets?
Yeah, the revision of base year for GDP. What has made it for the revision?
No, I think this is something that is being done constantly. I mean, you can't keep the base at the same level because the same for many years. So we had one 2004-5 base, then we shifted to 2011-12 base. Now, therefore, after 5 years, you have to, because what is happening is in the economy, more commodities are being produced. Some commodities which are, I mean, you could take 20 years ago, when if you kept 70 mobile phones at home, then what happened? You account for the production of mobile phones. Therefore, the base has to be increased. But what the problem really is, how do you adjust the GDP of the earlier years when a new base is created? You have the data for 2004, 5, 5, 6, and all that on 2004-5 basis. Now you move to a new base 2011-12. We are still on 2011-12. Now, how do you revise that? That is a very complicated problem. That is a change method we can do it, and otherwise apply the same methodology to the base. But there is a problem there. The same methodology cannot be applied because that kind of data may not be available. To go and find out from 2002-3 some kind of data that you have used in 2015-16 is impossible. Therefore, there are problems there. But every 5 years or something, the base has to be changed. I mean, the artificial intelligence will come in, something else will come, and therefore we'll have a different type of. Now, asset monetization. Only one way of raising the resources. I mean, I think there is really what is really important there is to see that is the procedure that is followed in asset monetization is above board. Take for example land. There is one idea that there is government land, and you can sell the government. And you know that area is full of mines. It's a very difficult thing because what the proper value is at the market value. Now, we have said there are a lot of problems even now in the registration area. I mean, the house is registered or land is registered. So they have what they call a reserve price or something like that and so on. So what I would really think is that they have to be extremely careful regarding the procedure they adopt, which is recognized by everybody as a home. I think it should not give rise to an opportunity for some people to make money. I think that was.
Thank you. question here is we are going for a very easy expansion of one state, but we are unable to expand the real economy. Without expanding the real economy, what is the use of expanding the monsoon economy? So we having a big gap between the expansion of real economy. What I mean is we have so many sectors in the economy, primary, secondary, tertiary, and we have so many subsectors in the economy. We are not trying to bring activities in all the subsectors, especially only we are hanging on to the service sector, say IT and other things. And we don't mind all the other sectors or subsectors. So how are we going to bring growth without addressing to the expansion of the real economy? Because real economy has to absorb the money. But we keep on expanding the money economy, we go by passive norms. We don't have any model as such to expand the real economy. We expand the monetary system, banking reforms, all are good. But the absorption is not there, as you already said. There is no optics. They are ready to go for ready to give disperse loans. There is no one to take the loans because they will crack. So what is the thing we are going to expand?
Yeah. Okay. Now the whole point is this, as I mentioned in the course of my lecture, that the banking system cannot simply expand credit unless there is a demand for credit. I mean, I think sometimes we can the rate of interest is so low that it becomes attractive for people to take risks and abroad. Therefore, the famous thing which is being said about the expansion of the financial system is that the growth of the financial system is necessary for the growth of the real system. Otherwise, the expansion will not happen. Take, for example, the financial system comprises of institutions which are called financial intermediaries. Why? They borrow from one and lend to the others. The depositors or the borrowers as far as the bank is concerned, they borrow money from them. They have the surplus. And then they lend it to the people who need the money. That is why the financial system, you can't decry the growth of the financial system. Financial system is critical for the development of the real economy. Where the problem will arise is two situations. One, there is too much expansion, or that the lack of the proper assessment and leading to problems in the area. Therefore, it does. Therefore, let's look at the real economy. The real economy will grow as the real sectors support each other. There is an interdependence in the economy. For example, bring agriculture and industry. If cotton grows more, then the cotton textile industry will become. Therefore, you should never talk in terms of saying as if this is one sector, that is another sector. In economics, we talk about what is called input-output table. If you look at the input-output table of the antiques, you will find that every sector takes inputs from various other sectors, and the output of that particular sector becomes the input of another sector. Therefore, the essential situation is that is what is called in economics the backward linkages and the forward linkages. For a steel industry, the backward linkage is availability of iron ore, availability of coal, and so on. And the forward linkage is the steel being used by the steel users of various types, railways, everything. Therefore, there is a linkage there. The whole point is that if in the final analysis, what drives the growth rate is the investment. The point that I have been making in recent speeches is that the investment rate in the economy has fallen recently. Not recently, from 2012. It used to be the gross fixed capital formation rate used to be 33% of the GDP. Today, for the last year, it is 28.2. The 5% reduction in investment rate is too much. Therefore, we need to raise the savings and we need to raise the investment rate. And that is the answer. Then, because of the interlinkages that I want to talk about, it will grow. And people talk about, for example, what are the industries which have the largest multipliers? Sometimes people talk about road gain because it absorbs people, it provides employment for various kinds of people. Housing is also regarded as a sector which does a lot of backward and forward linkages. Cement demand goes up, and electrical goods of various kinds, the demand is also created. So, if the investment rate picks up in the economy, that will drive the growth rate, and that is the most important thing on which the policymakers have to focus.
Good morning, sir. I am from Union Bank Employees Union. The topic was really vast. We would have loved to hear a lot more about you about monetary and banking. Both were vast topics. What I want to ask from you is, are some of the ills plaguing the banking industry due to the fact that commercial banks are not equipped to lend to long-term capital projects and infrastructure projects?
You see, we had a system earlier when there were specialized institutions like IDBI and others, IFA, Industrial Finance Corporation, the private sector, ICFC, and there, which provided long-term credits. Then we moved to a situation in which the commercial banks themselves will provide both short-term and long-term credit. And the long-term lending institutions almost exited. And there was a reverse merger in the sense the ICICI bank just absorbed the earlier institution and became one institution. There is some thinking going on now as to whether we should go back to the older model of setting up long-term lending institutions. I think some mention was made in the budget also. Therefore, perhaps that may be essential. But the most important thing is that if you look at the world, there are two models as far as providing long-term credit is concerned. One is the model of the United States, where the long-term finance is provided by the capital markets. That is, their banks also provide, but they provide very little. But what the main source is through the market. The bond market, for example, is very developed in the United States. And therefore, the investors go to raise funds either through equity or through bonds. And the bonds market is well developed because long-term savings institutions like insurance companies invest in the bond market. And therefore, the funding for the bond market comes from the long-term finance institutions. And that is what it is. The other model is to set up lending institutions which provide long-term credit. That is the German model. In Germany, the bond market is not that well developed. So we thought initially in 1991-92 that we will also develop a bond market in India. Over a period of time, it has been clear that the bond market has not developed. And therefore, we really need to go back to the long-term institutions. But we need not go back to exactly the situation that prevailed prior to 1990. We can let the bond market create conditions under which the bond market will develop, and also have some long-term lending institutions which can provide long-term credit. You see, the problem with the commercial banks apparently is that while they have a lot of expertise in analyzing the short-term demand for credit, they are not proved to be that successful in providing long-term credit. What has happened in the recent period, or one of the reasons for the rise in the non-performing assets, has been the failure on the long-term side. It is not so much on the short-term side, it is on the long-term side. So that is therefore, there is nothing like rocket science as far as the banks are concerned to learn this, because they are in the business of providing it. They could have done it, but somehow it didn't happen, and that is the problem. Therefore, I would say a mix, that is what is real. After all, the commercial banks do provide long-term credit to small industry. It is not as if they are not providing long-term credit. They do. Therefore, the commercial bank should build the expertise for providing long-term credit. Maybe to a limited extent they can provide. Long-term institutions can do, but at the same time, we need to develop the capital market, the market for bonds.
Rangarajan, Department of Economics. Sir, actually, from the textbook readings as well as the speech that you had done, we understand that 40% of the total credit goes to the priority sectors. Actually, how this 40% is being allocated among the banks? Because we have private sector banks, we have public sector banks, we have foreign banks. How this whether 40% is achieved?
There's no question of allocation. Each bank has to provide 40% of whatever it is lending the credit for the priorities.
That is at the branch level or the whole?
Only the bank.
Okay.
Some branches may be purely taking deposit, some branches may be lending.
Okay.
But it's a bank wise.
Okay.
Each bank is required to lend 40% of its total bank credit for the priorities.
Okay, sir. Another thing is that is there any change in the definition of priority sector after the pandemic? Because have they included any sector into the priority sector?
There is some changes. There are some changes which have been made in what constitutes the priority sector. In fact, the credit to the export sector, which is also somewhat special, is not included in the priority sector. That is not part of the priority. But there are some which have been added, like housing of a particular level and so on. Not all housing, but what we call economically weaker sector housing and all that. So some changes have been made to redefine what is priority.
Because during the pandemic, it was like health expenses which has gone, which has increased a lot. During the pandemic, it was the health expenses which increased a lot. So whether something like health sector came into the priority sector.
I really don't know whether the health care, I don't think so.
Thank you.
Excuse me, first last question. Yeah. Sir, as a former. One last question. As a former governor of RBI, I'd like to ask this question. So you can see so many willful defaulters who are still leading a flamboyant lifestyle, where the lifestyle of those defaulters have really not changed, despite the fact that they be willful defaulters to the banks. Where is there any kind of a possibility of Reserve Bank of India stepping in and saying or giving directions where some kind of public facilities or amenities is being utilized by these kind of people? Can some kind of restrictions be imposed? Because I feel there are some countries which have actually imposed some kind of restrictions on willful defaulters where they are not able to access public amenities or public utilities. So is there any kind of thought process with Reserve Bank of India bringing? Because if this kind of thing is being initiated, there may be some kind of a very good recovery even from the banks from these kind of willful defaulters.
A number of things have been done in order to get back the the credit. There has been some court cases still going on whether personal guarantees given by the promoters can be utilized or not. It is still, I think, in the court. But I think the most important thing that has happened in the recent period is the insolvency and bankruptcy code. I think that has really put some fear in the minds of the borrowers. I think it is a very good legislation, and I think there has been some problem because of the court intervention also. You remember that the RBI circular was considered not correct by the Supreme Court, and then some changes had to be introduced in order to come within the provisions laid down by the Supreme Court. But I think the one important thing is that once somebody has been taken to the court and declared as a bankrupt or something like that, then his ability to borrow from the bank system will not be. I think that is one important thing. Previously, somebody is a defaulter in case number one, but then he was getting the credit from somewhere else at the same time. Now that is not possible. Therefore, the IPC has had some teething problems. I think we need to put that into a more rigorous form. But the legislation itself is an important step forward. So this whole idea of who is a willful defaulter, who is not, is also a big issue, because the conditions change, as I mentioned. Some projects which were good become not viable because of the external circumstances. So to figure out which ones have become bad because of external circumstances, which have become bad because of the deliberate actions of the borrowers, internal mismanagement, and so on and so forth, is somewhat difficult. But the IPC, I think, is an important step forward.
So whatever may be the changes in the monetary policy as well as the banking policy or modifications, most of the people are benefited richly, not by the poor people. Even this situation, this pandemic situation, layman not able to get into the loan from the bank. Not able to get what? Loan. Whatever may be there. So why these recognized are excessive? So most of the people, willful defaulters are there. So that people are escaping, but poor people not enter to the bank. What is that suggestion?
Yeah, I think it's a very generalized statement. I mean, I would not say that the smaller people are not able to get credit at all. I think there are enough stats to show that small borrowers are also getting the benefit. That is why the Reserve Bank of India also set up the small service banks also now. In fact, in my time, I created the local area banks, and I have always felt that if that thing had been pursued further, it would have been better. Somehow, my successors somehow did not find it appropriate to push it, and but the LAB has now been resurrected and given a new form. I think there is some difference between the LAB originally evolved and the small service bank. Now, I think that is, in terms of jurisdiction, that's a big difference between the two. But I think that is why the Reserve Bank of India has been also supporting to set up the microfinance institutions and so on. I think the small borrowers find it more easy to go into such institutions rather than going into a bank branch. branch. But I suppose the bank branches look somewhat forbidden for the small borrowers. But that is, I think things are changing. We also introduced at one time, the Zobank introduced at one time, the business correspondence and others, so that they can provide a link between the borrowers and the bank branches. I mean, that's the idea. So, in India, we have experimented with many things in order to meet the small borrowers. First, we thought after 1969, let us open branches in the rural areas. That will be there. So we did that. Even after that, it does not happen, as you mentioned, to the same extent. Then came the idea of regional rural banks. Now, my own view is the regional rural banks merged and become bigger and bigger. They have lost the touch to the local. I don't know, the unions have been pleading for these regional rural banks to become bigger and bigger. But when they become bigger and bigger, they are more likely of the other commercial banks. Guarantee. So therefore, what I'm saying is that we have experimented with various institutions. What has happened to the cooperative institutions? The cooperative institutions were set up particularly to meet this point. But the cooperative credit system is in bad shape. I know several committees, like the other committee, was set up to look into it and so on and so forth. But nothing happened. But I would not blanketly say that small people are not getting credit from the banking system. And I think that is an effort. But I think probably the small service banks or the microfinance institutions may be a good way to really reach out to the small.
I think that's certainly one last question from the sports point of view.
So my question is a little bit controversial. So is the RBI autonomy under threat? We might not get any other opportunity to hear from Mr. So could you please share your experience? Is RBI autonomy under threat?
Last question. So I'm going to say that is a long question. It's the last question, but it's the long question. To answer that, I will need another lecture. I will only say that look, I think the different institutions have been set up with certain objectives, and therefore the autonomy is important for ensuring that these different institutions perform their functions effectively. But there is the problem of how close fiscal policy and monetary policy are intertwined. There is a term which is used in literature, which is called fiscal dominance. Fiscal dominance essentially means that the fiscal policy is so strong that it makes monetary policy almost a handmaid of fiscal policy. For example, if many people say, let the government spend. All right. What if the government is not able to raise adequate revenue? Because there are always problems about raising revenue. Everybody says, no, don't tax somebody else. But that doesn't work. Because when you tax somebody else, then they say that tax somebody else. So there is a problem. In the COVID-19 situation also. If the expenditures increase and the revenues are not adequately increasing, what do you do? The only way to do it is to borrow. But if there is excessive borrowing, where will it be? Well, who will subscribe to it? Ultimately, what happens? The central bank of the country provides larger liquidity, and then banks have larger liquidity, and they invest in the government. So that is a real problem. So the government should recognize that the Reserve Bank of India has been set up with certain objectives, and the institution must be allowed to fulfill those objectives. I think there is a need to recognize the mutual responsibilities of the institutions. The Reserve Bank of India must also recognize that the government also has its own responsibilities and help them to that extent. But any institution, including or getting into the other institutions' responsibilities, becomes difficult. But it is easy to say this, but I think in practical life there are problems. But a mutual understanding between the Reserve Bank and the government of where to draw the line is extremely important. Two things are needed. One is a recognition of the responsibility. I can tell you during my period, when I was almost the finance minister, I said this automatic monetization of the fiscal deficit. That is, if the government keeps on borrowing, automatically the Reserve Bank of India will subscribe to it. Is wrong. When I put it to the finance minister, he said, all right, I recognize it, and therefore we stop that. So there was a mutual recognition of each one's responsibility. Therefore, that kind of a thing is required. And second thing is, when there are conflicts, in real life, conflicts cannot be avoided. When there are real conflicts, when there are conflicts, there must be a mechanism to resolve the conflict in a manner in which neither of the institutions is affected. I think there is a responsibility on the Reserve Bank, there is a responsibility on the government. So when real conflict arises, the mechanism to resolve that should be there. That should be really a heart-to-heart talk between the governor and the finance minister, and be able to, with an open mind, resolve the issue. Of course, in the final analysis, the government might say that we are responsible for running the economy. You are part of all of this. And I suppose the only option is for the government to fix. That means there is no other way to resolve it. But I think it is best. But it is best not to go to that situation. You must find a fair way of resolving the responsibilities of the two institutions. But I can cite examples that will take a lot of time.
Thank you so much, sir. Really, it's a valuable time with us, sir. Really, a great pleasure for us to discuss sometimes with you, sir. Thank you so much, sir. I would like to thank all the city colleges, HODs, faculty members, professors, students, scholars, each and every one. And also the all India Bank, the employees association people also, I would like to thank anyway. And our university authorities also, I would like to thank. Now, I would like to call upon our Rangarajan to provide formal vote of thanks in this session. Thank you, sir.
Before that, Madam, I would like to honor you also. Here with the head of the department of the Department of Economics of the University of Madras. Our chief guest today, Professor Dr. Rangarajan, Comrade Arunachala, the General Secretary of the Tamil Nadu Bank Employees Federation, the faculty members of the Department of Economics and also from the colleges and our banking fraternity people and their students. We are extremely happy that today, with the help of Madam, we could organize this endowment lecture. This endowment was instituted in 2004 to perpetuate the memory of one of the legendary leaders of the bank trade union movement, Rangarajan Chakravarti, that was explained by her. He died in 2003, and so we approached the University of Madras, the Department of Economics at the time, to have this endowment. And they really agreed, and that's why since then, every year we have been having the annual lecture, but for the last 2 years because of the pandemic. And many people have given wonderful lectures, but I think today is the icing on the cake that today has agreed to be here and he gave a wonderful lecture in this. Not only in the University of Madras, from the All India Bank Employees Association, we have such endowments with the Jawaharlal University in Delhi in the name of another leader, H.L. Parwana. And we have one more endowment with the Jadavpur University in Calcutta in the name of Prabhakar, in fact, was the architect of the All India Bank Employees Association. We believe that we cannot be like an ATM every time fighting with the government and banks to get some wage revision, etc. That's a part of the job we shall do. But we believe in the All India Bank Employees Association that banks have a very important role to play in the Indian developing context. And that's why it is also part of our agenda that we must intervene and see that proper banking policies are evolved and pursued so that it really helps the people and for the purpose of the nation. And these leaders have been totally committed to that also, and that's why we have these activities also. I'm very happy that today we have this lecture. In addition to these annual lectures, we have also sponsored a lot of students, postgraduate students who are doing research, scholarship also we have done here. So happy about it. I'm very sure it is just to come with the initiative of Madam. More and more such a relationship will develop and we shall be able to help you. We are always with you in the Department of Economics, but one of the renowned departments in the University of Madras. We are so happy and we are very thankful to all of you. Today, his lecture was not only academic, it was more informative, more educative in the present context where our economy is in a particular situation. As a part of that, the banking system is also placed in where we see. And I'm sure that this lecture and some clarification that he gave has given us a lot of insight. In fact, in the All India Bank Employees Association, as I said, this has been our endeavor right from 1946 that in India we believe, very strongly believe that banks, the public sector banks should have the dominant role to play. We know that we are in a mixed economy. Private players will be there, but we believe that public sector has to be the real main engine in driving the economy forward, and that's why we fought for nationalization of banks. We're very proud that the banks became nationalized in 1969, which completely transformed the banking profile from class banking to mass banking, where we see proliferation of branches in the rural areas and banks services becoming accessible to common people and guarantee for the safety of the people's money, lending to private sector, etc. That way, in the last 50 years, the government public sector banks done a wonderful contribution for economic development. But today, in a changed situation, there are challenges, multiple challenges, and we also recognize. and we definitely want that public sector banks should be there, not only there, they must become relevant even today. It is not that public sector banks are not relevant and private sector can do. They can play some role, but in India, evolving and developing context in which Indian economy is placed, the public sector banks are still the very crucial, critical, pivotal role to play. And that's what we are endeavoring. In fact, today we are on strike. Exactly. During that we have come that we want the bank to continue in public sector and to reach out to the people. And these lectures will be of great help. We would like to further interact with the Department of Economics also these matters. And that way I am very confident. And he was also referring to the bad loans, as he said. Yesterday it was a good loan, today it's a bad loan for different reasons. But what we are talking is that those who are deliberately cheating, intentionally cheating, on them we need to take some more measures. IBC is one thing where some gaps are that we are resolving. But we believe we have been suggesting to the election commission that why don't you ban the defaulters from contesting in elections? Some of them not only contest elections, they become MLAs, they become MPs, some have become even ministers. And these things are there, and we're also saying that criminal action can be taken in a civil proceeding. Anyway, those things will continue. But I'm sure that not only that as an organization with our own issues, these relationship with the University of Andhra will also further help us to enlighten ourselves to learn. And in that context, his lecture today, sir, has been highly, very informative and educative to all of us. Your age and your preoccupations, etc., we are kindly consented to be here because we are extremely thankful to you for your gesture. And we have otherwise also relationship from the All India Bank Employees Association because we also have our own union in the Bank of India where you are the governor, we have been interacting with him. That way it was wonderful. And we are also very happy and thankful that a large number of people, all of you have come, particularly students. I'm very sure because they are going to be the future of the country, etc. I see some future finance ministers, some future bank managing directors here, and I'm very sure that this journey will continue. Thank you very much. Once again, we shall meet again. Thank you.